According to supply managers in the 9 Mid-America states, how is the economy performing?
Welcome, I'm Ernie Goss here at Creighton University, reporting on the Mid-American Business Conditions Index of Survey of Manufacturing Supply Managers for the month of July. And the number was down from June's 51.3 to July's 50.7. Now that sounds like it's not that bad. Well, it's not good. What we've been seeing, this is the fourth time this year that the index has been above growth neutral, but moving along right along growth neutral, so up and down, below and above growth neutral. So it's moving sideways to down, I'll say, the manufacturing economy in the 9 Mid-America states. In fact, we asked about the supply managers about a recession this year, and 44% said their industry, manufacturing, was either in a recession or going to be in a recession in the fourth quarter of this year, so not good. Only 11%, now that's 11%, expect solid growth ahead. Now, of course, that means 89% do not expect solid growth ahead. The best you could say is neutral growth ahead. So all in all, it was, again, not a good survey of manufacturing, and that's what we're seeing nationally. We'll see the national number come out later on this morning, and you'll see here I'm bringing up the graph of the Creighton numbers and compared to the U.S. numbers, and that's what we call the PMIs, Purchasing Management Indices, and you'll see there in blue, and you see there since the beginning of the year, January, this is over the last 18 months, January of this year, and the U.S. number, both the Creighton and the U.S. number, moving above and below growth neutral like a saw blade, up and down, so vacillating around that growth neutral number.
What were the hiring trends?
Hiring for the month was not good. The July number was 49.7. Now, that is up from June's 44.0. That's the good news. But 49.7 is still below growth neutral. We're not seeing any job growth to any significant extent average across the 9 Mid-America states. Now, some are doing better than others. The regional number you're talking about, in terms of the overall economy for the region, up about 1.7%. So that's pretty good. But then when you turn to manufacturing, down by 0.2 percentage point. So that's obviously not good, and that's what we're seeing, and that's what we're reporting on. The problem, of course, is I don't think one of the problems is that the BLS numbers are just not that good. In other words, I'm reporting on the BLS numbers. I don't think they're that good. The establishment numbers, you've got too many. They're recording part-time workers as the same as full-time workers. You're talking about dual job holders the same as single job holders, so the numbers are inflated. So those numbers will be revised later on. Look at the household survey, which comes out the same time, the same morning. It'll be the first business day of the month. That number is not going to be good. We've seen job losses in the household survey. I think we'll see them again this month. When you look at the underperformers in the region, that's year over year. Now, Arkansas is an underperformer in terms of manufacturing. Now, negative 1.2%, and you've got Iowa, negative 0.1%. You got Minnesota, negative 2.3%, pretty large number there. South Dakota, negative 2.2%. Now, on the positive side, you got Missouri up only 0.8 percentage point. Nebraska's pretty good, plus 2.8%. You've got North Dakota, surprisingly up 1.4%, surprisingly in the sense it's heavily dependent on energy, which has not been doing that well. And Oklahoma up 0.9%. So manufacturing overall, again, as I said, negative 0.2% year over year. So not good in terms of manufacturing employment in the region.
What inflation trends are you noticing?
Inflation in the region, at least according to the manufacturing supply managers, is coming down, and that's a good signal, but it's coming down because the economy is slowing down. The number was 59.9, which is down from June's 61.4. Keep an eye on the month-to-month changes in the CPI when it comes out later on this month. All item CPI for the first half of 2024 up 2.6%. The core up 2.4%. Both those numbers are still above the Fed's target. So we're still going to see the Fed move, and move reluctantly, but later on in the year. We're seeing disinflation, not deflation. Inflation remains above the Fed's target. The first 12 months of the year, we asked the purchasing managers about what they saw behind them in terms of pricing. They saw 4% growth over the past 12 months. Looking ahead, they see 2.3% growth ahead. So that's the good news, and that is darn good news. But what is the reason for these numbers softening in terms of inflation? I would say the economy is slowing down.
What is the economic outlook?
The outlook is not good for manufacturing. It's going to be slow to no growth. We're seeing a Federal Reserve that's being pushed to reduce interest rates. We recorded this before the FOMC's meeting on this week, and they will not have done anything. But listen to the language. I think Jay Powell, the head of the Federal Reserve, will have telegraphed a rate cut in September the 17th and 18th. So we'll see a rate cut then. I think we'll see one more in the rest of 2024. We're going to see the prime interest rate move down to 8.25% on September the 19th. That's a Friday. We'll see it move lower. We're seeing, keep an eye on the bond market, though. The bond market's telling you what's going on. Yields are coming down on the 10-year Treasury. When it moves between 3.8 and 3.3 to 3.4, we're in an okay range there. It moves below 3.8, that means telegraphing you more of a recession than an economic slowdown. Not a major recession, but an economic slowdown for sure. Moves above 4.4, 4.3, 4.4, more inflationary pressures ahead. So that's where I'm expecting the movement to be within that range, I think. Watch the Federal Reserve's balance sheet, what they're doing there, buying and selling bonds, long-term bonds and mortgage-backed securities. Most of all, watch the residential housing. I expect the numbers are going to get much weaker in the rest of 2024. There's just too much inventory there. We're seeing phantom sales, I would argue. In other words, the market is definitely weakening, starting in Florida, Texas, Georgia, Arizona, the Southeast, but it's moving across the nation, not as much in the Northeast. Watch that market. And listen to what the Federal Reserve members of the Open Market Committee state. And they're going to telegraph between now and September the 17th and 18th that there's likely to be a rate cut at that meeting. They're also going to be telegraphing where there might be more rate cuts after that meeting. Keep an eye on the price of gold. If that market weakens, as I expect it to, residential housing, as I expect it to, now not so much this month, but sometime in September, maybe even in October, that's going to push the gold. That's going to telegraph tougher times, higher risk, and higher risk means higher gold prices. Right now, gold prices are moving in a range. I'll call that the nature's currency is moving in a range, not too down, a little bit up. I expect that to continue, but when these risks rise, you'll see gold prices rebound and perhaps fairly briskly. So keep an eye on that. And then keep an eye on the meeting of the BRICS nations in Kazan, Russia. Now, when the BRICS nations met in South Africa last year, President Putin could not come because he would have been arrested. He will not be arrested in Russia, that's for sure. And he's the main instigator of undermining the U.S. dollar as a global currency, and he'll continue to do that. The BRICS nations, that's Brazil, Russia, India, China, and South Africa. And what they're doing is trying to issue a global currency which will replace the dollar, and it's backed by gold. Now, whether it'll be a digital currency or in fact a printed currency, I expect it to be a digital currency, but they're probably a year or two, maybe 3 or 4 years ahead, but there will ultimately be a BRICS currency in my judgment. So that's it for our July report. Thank you for joining in, and between now and our release on the first business day of September, may your economic cup runneth over, and thank you for joining in.